Hi everyone, welcome to another Weekly Forex Forecast for the week ending May 29th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, the dollar versus the Canadian dollar, as well as gold or XAUUSD. We may have seen a false breakout from the EURUSD last week, and the dollar CAD looks to be coiling for its next move. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the EURUSD, and I've been talking about this wedge pattern now for a few weeks. So as you can see, a couple weeks ago, it looked like the pair was going to break the bottom of this wedge pattern. So we have the year-to-date low back here, and this consolidation down here looked like weakness, and it also looked like the pair was going to break below that 107.70 area. However, instead we got this rally back above 108.90, and then we saw a retest of that wedge top. Now notice how we have a long upper wick on this candle, which illustrates the selling pressure in that area. All right, but we had this close above wedge resistance and then an immediate retest. So I wrote about this last week on the blog, and anytime you get an immediate retest like this, it's a sign that this breakout could be false. Okay, so it could be a bull trap. In other words, the market moves higher and traps buyers above this area before selling off. And I wrote that blog post on Thursday, and sure enough, Friday sold off from that area and also retested 108.90. Now, something else I shared with members, if I drop down to the 4-hour time frame, you can see where the pair also carved an upward sloping flag above that wedge top. So if I draw a level across these highs up here, and I take this lower level and plot it across the bottom, notice what formed here was an upward sloping flag. All right, so we had this breakout above 108.90 on this candle, and then the pair just kind of churned higher. But this type of pattern, anytime you get a flag that moves with the trend like this is often a bearish formation that marks at least a short-term top. And sure enough, you can see where we got that close below it, and then we had that close back inside the wedge pattern. So this is something I talked to members about when the pair was trading up here, and I said that a breakdown was likely. Now for the week ahead, 108.90 is going to serve as support. All right, so notice how 108.90 has served as a pivot for the pair for the last few months. So until we get a daily close below 108.90, that level is going to serve as support, with resistance being the top of this wedge pattern somewhere around 109.20. If we do get below 108.90, the wedge support down here around 108.20 is going to be exposed. But just keep in mind too that we do need to see a break below 107.70. You can see where 107.70 has been horizontal support for the entire year. All right, so this area between 107.70 and 108.20 is going to be the area to break. Alternatively, if we get a close back above this wedge top, it could re-expose that 110 resistance area. The pound versus the US dollar finds itself in a similar position as the EURUSD. So I wrote about this recent breakdown out of this wedge. And as you can see on the daily time frame, we had this lower boundary, and then we had this upper one, which is actually the bottom of this channel. Now we had this close below it, and then you can see where the pair retested that wedge support as new resistance. We then had a move into 122 where we caught a little bit of buying pressure in that area, but then closed below it. Now last week, as of right now, this right here looks to be a false break. Okay, it's a false break above 122 because notice how Friday closed back below it. And you can see this by the fact that we did not get an aggressive move above 122. All right, the pair didn't come up here and then slowly churn back toward 122. Instead, we got this close and then the pair just moved sideways. All right, so anytime you see that, you have to be careful and respect the potential for a false break. So for the week ahead, 122 remains resistance and 120 is support. Now, given the height of this wedge back here, I still favor a move down toward 120 with a break there exposing 117.80. All right, so that area is going to be the target based on this wedge pattern that broke down back here. If the pair does close back above 122 though, that would negate the short idea. But I do like the idea of looking for shorts from 122 as long as that area holds as resistance on a daily closing basis. The dollar yen has been a slow mover recently ever since it broke out of this falling wedge pattern. So I've been talking about this falling wedge in the members area now for weeks. And I was even buying the pair down here in anticipation of a break higher. So I remain long from 106.60 now. So that's my average rate. And essentially back here when the pair broke out, I was looking for this new support area to hold, which it did. Now, one thing I pointed out on the blog recently is that I need to see a daily close above 107.80 before I add to that long position. You can see where last week spent the entire week just hovering right below 107.80. And as boring as this may seem right now, keep in mind that the pair is not backing down from 107.80. A lot of times when we see this type of price action, it does hint at a break higher. All right, so if we do get a close above 107.80 this week, that would expose the top of this falling wedge back here at 109.30. Now, support does come in at some of these recent lows from last week, and if we get through that, 106.90 would be exposed. And just like the EURUSD, keep in mind too that 109.30, the top of that wedge pattern, is actually right around the top of this multi-year wedge. So I've been talking about this now for months, and this wedge pattern dates back to the 2015 highs, where this level originated from some of the 2013 lows. Okay, so you can see where the pair recently retested the bottom of this wedge pattern. And 109 to 109.30 is the top of that multi-year wedge. So that's going to be an incredibly significant area if we do see a move into 109 this week. I continue to think that this wedge pattern on the monthly time frame could be a continuation of this rally back here. So we had a rally, then we've had consolidation. And if we do see the pair start to pressure the top of this wedge pattern and close above it on the monthly time frame, that could confirm the breakout of this continuation pattern and could also send the dollar yen much higher. That said, just keep in mind that as long as the dollar yen is within this multi-year wedge, we're going to see a lot of indecision from this market, just like we've seen recently on the daily time frame. The dollar CAD continues to consolidate following this March rally. All right, so I talked about this one recently where we had this rally, we then had consolidation in what looked like a descending channel. Now, as you can see, 138.50 has been holding as support now for several weeks. In fact, I even entered last week at 139.04, and that's an entry I mentioned in the members area. So I'm interested in adding to that long position if we get a close above this channel resistance up here over the coming weeks. Now, I know a lot of people are skeptical about a dollar CAD long position. However, you have to consider the fact that after this massive rally, okay, if we look at the weekly time frame, look at how we had this huge rally in March. And ever since that time, look at how well the pair has been holding up at these elevated levels. Okay, if this was a double top, and I'm referring to this high back here, okay, if this was a double top, we would have seen the pair sell off. Notice how back here, when we reached this resistance area, look at how quickly the pair sold off. And compare that to what's happening now, where we have this retest of that same resistance level. And instead of selling off, we had this initial sell off, but then look at how we've just churned sideways. All right, now this to me is a sign of strength. And as long as 138.50 holds as support, the idea of a break above this channel top is all the more likely. But it is going to take a close above that level, in my opinion, in order to break the pair free from this consolidation. If that happens, 143.30 is going to be the first key level to keep an eye on. Notice how it was support back here and then served as resistance. Beyond 143.30, we have 146.60, which of course is the year-to-date high. Alternatively, if we see the dollar CAD rotate lower and take out 138.50, I would have to delay my bullish outlook for the pair, and I would also start to look at the bottom of this descending channel. But for right now, going ahead, until the market proves otherwise, 138.50 is support, with a close above this channel top, sending the pair up toward 143.30. Last but not least, we have gold, or XAUUSD. I wrote about this one just yesterday on the blog, and you can see where we have this recent wedge pattern that broke out, and then we've had consolidation in the form of a falling channel ever since then. So as of right now, this breakout from this wedge pattern is still intact. We had them move higher, and then we've just had consolidation. Now, as I mentioned on Friday, 1700 is going to be a confluence of support to keep an eye on. If we see gold rotate lower and test that area, it's going to be key that buyers hold it on a daily closing basis. Alternatively, if we see the pair come up and retest the top of that channel and break it, we could be looking at another run towards 1750/60 and perhaps even that 1800 area, which, as I've mentioned recently, is my objective following this breakout from the wedge top. Now, one thing I do want to point out on the 4-hour time frame is it's going to be important to watch how the price action acts even within this channel. So notice how back here, before it even broke out of wedge resistance, notice these higher lows that it put in coming into this resistance area. All right, so back here, you can see where we had this swinging action within this wedge, but now look what happened here. We got the first higher low, we then had a retest of wedge resistance, we had a move lower and another higher low before we came back into resistance and tested it. Now, this price action right here signaled that a break higher was coming. And sure enough, we got that close on this candle. So keep an eye on how gold reacts within this descending channel this week. If we start to see this market retest resistance, move lower and form another higher low before it retests that channel resistance again, it could be similar type of price action to what we saw back here. All right, so keep an eye on how this market reacts within this consolidation. At the same time, we have to respect the potential for a bearish scenario, and that would unfold if we see a close below this 1700 area. So if we see a rotation lower into 1700 and the pair becomes really heavy and unable to bounce from that area, that could be a sign of weakness and an imminent break below 1700 for a run possibly back to 1640. So keep your options open as we watch gold consolidate within this descending channel, and be sure to watch the highs and lows that form within this channel, because those could be indicative of which way this thing breaks. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.